Okay, now it's time to go ahead and start our exercises. So I've got my workbook open. You should have a workbook on Blackboard that you can download in Excel, since I don't have the handouts for you today, obviously. Okay, so let's look at the first one, exercise 7.1. All we need to do is read the question and figure out what journal it goes in. So here we go. First one's May 1st. Purchase merchandise on credit. Well, it kind of gives it away that it's a purchase journal, but we have a cash receipts journal, a cash payments journal, sales journal, general journal, purchase. So the number one is purchase. I gave you a couple in there already so that you could have it for to look at. Number two, sold merchandise on credit. What journal would that be? Well, let's think about it. We sold something, so that means it would go in the sales journal. So the answer is sales journal. Third one, accepted a return of merchandise from a credit customer. Anytime we have a return or an allowance, it's going to go in the general journal. So I left that one there for you because that's a key question. People think it should go in the sales journal because it's a sales return, but that's not the case. Returns always go in the general journal. Fourth one, sold merchandise for cash. Okay, this time we're selling. It's not on credit, and it's cash this time. So actually, because it's cash, it's going to go in a cash receipts journal. So the answer is cash receipts journal. Number 5, gave $400 allowance for damaged merchandise. Again, anytime anything is returned for sales return and allowances, it goes in the general journal. So number 5 is general. Number 6, received payment on account from a credit customer. Okay, so initially it was on account in accounts receivable as a credit. Now you are receiving payment, so you must be receiving cash, which means it would go in the cash receipts journal. So cash receipts is next for number 6. Cash receipts. Number 7, issued a check to pay a creditor on account. So your payment in cash is going out, so that would be a cash payment journal. And the last one, number 8, received an additional cash investment from the owner. So you're accepting cash, so that's a cash receipts journal. Okay, let's look at 7.2. What do we want there? Let's scroll up. It says the transactions took place at a retail business. Okay, there's our accounts. We have to go through each transaction and decide what would be debited and what would be credited. So let's look at the first one. We sold merchandise on credit. The transaction involves sales tax. So we sold on credit, so sales would get the credit. It did involve sales tax, so sales tax payable. Because it's a payable, all payables are liabilities, all payables are credit. So our two credits would be sales tax payable and sales. So let's put that in. The credit is, they just want you to actually just put in the account. 401 is sales and 231 is sales tax payable. And then what gets the debit? We sold merchandise on credit, so it's accounts receivable. Okay, number 2. Received checks from credit customers on account. So we received money and that means from our customers, so their accounts receivable is going to go down. So the accounts receivable gets the credit and the cash gets the debit. That's 101 debit, and accounts receivable is 111. Okay, number 3, accepted a return of merchandise from a credit customer. The original sales involves sales tax. So now we have to return the sale, return the sales tax, and return the money. So those 3 accounts are affected. So that would be the sales return and allowances, 451. The sales tax payable, tax goes back to the customer, and then the accounts receivable. Okay, so that's debit 451 and 231. The sales tax payable and the sales allowance account, which is always a debit. And then we're going to credit accounts receivable. We need to take out the customer's purchase. Okay, number 4 for exercise 7.2. Sold merchandise for cash. Transaction involves sales tax. So your sales increases, your cash goes up, but you do have to pay the sales tax. So what gets the debit and what gets the credit? Sold merchandise for cash. The transaction involves sales tax. Okay, so cash goes up, so cash is debited 101. Your sales goes up, and sales is always a credit, just like fees income. That's going to be 401. But your liability goes up too. You have to pay the sales tax on it, so that's 231. So that's your answer. 101 for debit, 401, and 231 for credit. Okay, let's do number 5. Let's see if I can scroll this up. Gave an allowance to a credit customer for damaged merchandise. The original sales involves sales tax. So in other words, you're giving that credit customer a discount. So you're returning some of her money to accounts receivable. And so you're also going to return some of the sales tax. And you're going to use the sales return and allowance account, which is 451. So let's do the debits and credits on that one. So the 451 account, sales return allowance is always a debit, so it's 451 when you return something. Then you got to return the sales tax, so that's 231. And then you're going to credit her, his or her accounts receivable, because you gave her a discount in that. And the last one, provided a cash refund to a customer who returned merchandise. The original sale was made for cash and involved sales tax. So now we have cash, sales, and sales tax. So it's the same as the last one. The only difference is this one was on account. So accounts receivable was affected. This is going to be the same thing, but this time it'll be cash. So let's go back to our... So it's going to be the same, 451 and 231. But this time, instead of accounts receivable, it's a cash account, 101. Same thing happened, just a different account. Okay, let's go ahead and move on to exercise 7.3. Do our first sales journal. Record the credit sales. They gave us 3 of them that we need to record right here. June 1, sold a tent and other items on credit to Bill Justin. Issued sales slip for $600 plus sales tax of $48. Okay, let's see if I can pull that up where you can see the problem. Okay, let's just drop in his name. We have a sales slip number, and it's June 1st, and the sales slip number was 1101. Customer's name. The amount was for $648. They told us what the tax was. Let's see, $48 tax and $600 for sale. So your tax is $48, and the sale was for $600. So the total in accounts receivable is $648. That's the total amount you're charging the customer. Some things will have tax and some won't. Because they said there's tax here, the total to accounts receivable is $648. Next one, sold a backpack, an air mattress, and other items to Vanessa Chen. Issued the sales slip 1102 for $450 plus the sales tax of $36. So she will owe $450 plus sales tax. So we're just going to type her in. That's going to be 1102. Vanessa. Jen. 486. Oh gosh. 4. Okay, how much was the purchase for again? Let's go back and look at that. I think it was $450. The sale was for $450. And the sales tax is $36. Alright, let's take another look back here. Sold a lantern, cooking utensils, other items to Jim Salazar. Issued slip 1103 for $375 plus sales tax at $30. Okay, so you see we're just recording in the sales journal. This doesn't take a whole lot of thought. Okay, his sales tax was $30. And his thing was $375. That makes his total of $405. And now we've just done 1 through 3. Let's see if we can go on to the next page. $7.4. General Journal. Okay, let's look at what 7.4 wants. Record the General Journal entries for the following transactions. So there's only 2, but these transactions are usually more than 2 entries. Now that we have sales return and allowances and sales tax payable, we're usually dealing with at least 3 entries. So here we accepted a return of damaged goods. So that means we're going to use the sales allowance customer account. Issued a credit memo for $837, which included sales tax, and the original sale was made on June 30. Let's just go to the General Journal and figure it out. Okay, they told us it was July 5th. And we know the debit's always got to be listed first. We know the sales return and allowances is always going to be a debit. Sales returns and allowances. Okay, they returned $775 worth of stuff. I'm pretty sure that's what it said. Let's check. Nah, I'll get you that number later. That's what that's minus the tax. Okay. So, sales tax payable they did give us. That also is now a debit because you're taking it out of the credit. That was for $62. And of course, the last thing that's affected now is your credit. And that's your accounts receivable. This person returned something. Okay. So the total amount back to them is $837. Let's just check and make sure that's $837 down here. $837. Sales tax $62. Sales slip. Okay. So the $837 goes back to the customer. That's all you need to do, but they kind of want you to write a memo. So you would put like CM for credit memo, and maybe you'd put it's credit memo number 301. Actually, let's put it where I can see it. Okay. Oh, the next return. Let's do another return. Notice the returns are in the general journal and not any other journal. Gave an allowance to Robert Lynch, a credit customer, for merchandise that's slightly damaged but usable. Issued a credit memo for $1,026. Includes the sales tax $76. The original sale was made on sales slip on July 17th. Okay, let's go back to this journal. That means we go back to the sales return and allowances, the same thing as before. And again, sales tax payable goes back to the customer. And again, no different, the customer accounts receivable. It's the same transaction almost, except they're just going to put, again, the credit memo number, 302. Actually, and you might want to put original sales slip in case you want to refer back to it. Okay, so what are the amounts? We know the sales tax payable was $76. We know of the total purchase. Coming back, 1,026. I'm going to do this. 1,026. So that means what gets in the sales return and allowances is $950. Now exercise 7.4 is done. Let's go on to 7.5. They give us a sales journal. Describe how the amounts would be posted to the general ledger. Okay, so the first one, let's see. We would take this and we'd post it to the general ledger. Actually, they ask you to type it all out in a sentence, which is kind of long and difficult. We're going to skip 7.5. Let's go straight to 7.6. Let's do a trade discount. So this is an easy trade discount, and 7.7 is a harder one. In this case, if we're just giving a discount to the first person, $800, 20% off, we can compute that. But in then 7.7, we have to do it twice. We have to take like the list price, give a discount of 40% of the 6,000, and then 15% on the remainder. So this one is the one that gets more complicated. Let's just do the simple one first in 7.6. Okay, we know the list price is $800. They want us to give a discount of 20%. So what's actually the list price is 800. My bad. They want to know what 800 times 20% is, and actually it's 160, giving us the balance of 640. That's easy enough. First, second one, list price. Let's go to, I forget, where is the second one? Yeah. What's the list price on the second one? 2080 and a trade discount of 40. Okay. Less 40%. Falls into place for me because I didn't take off the formulas. So yeah, it should just fall into place for you too. So we can move on to on the last one. What is the last one? 1,500. Okay. All right, let's move on to the last one, 7.7. Actually, it's not the last one. It's the last one computing this particular problem. 7.7. Okay. We're going to do the same thing here. List price for 7. In this situation, it's 6,000. Less the first trade discount. First trade discount, let's look at what the first trade discount is. 40% and then 15% on the remainder. So 40% of 6,000 is 2,400. That should give us a balance of 3,600. Then we've got to take 15% of the 3,600, which is 540, and that gives us a sales price of 3,060. So that's all you need to do for these problems on your own. I will actually let you do 2 and 3 on your own so you can practice and move on to 7.8. Let's go on to 7.8. Compute the sales tax due and record its payment. So there's the balance at the end of the month of our sales and our sales return and allowances. The net sales are subject to 6% tax. Prepare the journal entry and record the sales tax payable at the end of the month. Okay, sales are sales tax payable and is all they want us to record. So that's what we need to figure out. So we need to go ahead and do the math. What's 6% of the firm's net sales? So let's 2,000. Oh, I've got a calculator right here. Let me see if I can find one. 2,0,0,0,0. We're going to subtract 2,000. And we're going to multiply that by 0.06. That leaves our sales tax at $13,080. So what we did is you got to take the 2,200 and you got to subtract out the returns and multiply it by 6%. So we're going to go here. Let's do the general journal entry. All we're doing is the sales tax payable. And I just figured it out. it is the 13,000 0 8 0. And my cash goes down because I'm paying the sales tax. And my cash goes down 13,000. Oh, 8, oh. That's it. All you really have to do is then put a note in the end of the journal that you paid your sales tax for the month. Like you could say, like, paid 6% sales tax on 200,000 18, and not the 220 because you had to take out the 2,000. And that's all you really need to do for that general journal entry. That's it. 7.9 is even easier. Here we're going to make a list of accounts payables. Okay. Prepare a schedule of accounts receivables. Prepare a schedule of accounts receivable. What should the balance in the accounts receivable be? And that's for the Country Barn Antiques below. Okay. Let's see if they have it. So basically, we got to look at each of the ledger and post it into the accounts receivable. So the first one we have is Cindy Anderson. So the question is, what do we post? Well, all we want is the balance, the final balance. Actually, that's not necessarily true. Yeah, it is. We want to know what their balance is at the end of the month, so we're just going to do a final at the end of the month accounts receivable. So let's do that. Okay, we've got Cindy Anderson. Her final balance is 2015. So we're just going to go here and put her. This is going to be a schedule of accounts received. And you're going to put Cindy in, which is going to be 2015. Edward. What's Edwards? Edwards is his balance is 383. So you're just going to go back to your worksheet and put in 383. Neil, what is his balance? $756. So we're just going to go back to here and put in 756. So instead of me doing one by one, I'm going to go, to save time, I'm going to give you the total, and you're going to go in and put it in the right numbers, make sure you got it right. And your total should be $9,230. Okay, let's go ahead and look at example 7.10 and see what they want us to do with this one. Okay. Posting sales returns and allowances. Post the following journal entries to the appropriate ledger accounts. Assume the following account balances of March 1. Okay. So we're going to go ahead and post to the ledger this time. We have a return on March 14th and a return on March 22nd. So let's see exactly what they want us to do. I'm not sure. Let's take a look. Okay, 7.10. This is the actual solution. I want you to go in and post each entry. So let's go ahead and see that for Kara and Sadie. I'm going to go ahead and print this so I can work along with you a lot easier. And one more. Okay. I have to make sure I've got the right one up for you guys. Okay, there we go. Okay, so we have accounts receivable. Sales tax payable. Sales return on allowances. And we have the ledger of each person. So let's first look at the credit memo we're going to put in for Kara. That was on March 14. And there's a credit memo for that. There's a credit. And she gets a credit of, let's go back to the page and see what that is. $324. So they wanted you to look at the journal, and we're actually going to put these in the ledger. So her credit is $324. Credit memo 101. So she gets a credit of $324. Actually, I'm going to put credit memo 101. And then you have to do a new balance, which should be $616. Let's see what Kara's is. Actually, before we do Kara's, let's make sense out of this. Okay, so wherever we throw in a credit, we have to throw in a debit. We can't just throw in a credit somewhere without posting a debit somewhere. So this is the subsidiary ledger. We're going to go to the regular accounts receivable ledger to put in the debit. So that's going to be up here at the top, and that gets a debit right here, March 14th. And that gets the, did I throw in the credit or a debit? I should have put, credit. Yeah, it's still a credit because I'm still on accounts receivable. That's fine. That gets $324. Okay, well, I'll compute the rest in a minute. And this is just posting to the ledger, so we don't need to worry about the debit, where we put a debit and credit, so that's fine. And we'll do the same thing for Sadie. She gets $108. I believe. Yep. Ugh. 108. I'd rather do this on paper. We'll have to fill in dates and everything, but let's just go back up to accounts receivable for just a moment and make sure we put it in there. And And why do we do this? We do this so that at the end of the month, we don't have to put it in every single journal. We can just take the final accounts receivable and post it. And then the balance here now is $12.56. Okay. We now have to do the sales tax. So, I don't think there was sales tax in the first one, but there's sales tax in the second one. Sales tax there is 24. The sales tax is 8 here. So the sales tax payable gets 24, and then it gets 8. We've got the 24 in there. Somehow I left it in there before, but now we just remember to put the 8 in, leaving that 32. What else? Did we forget anything else that we needed to post from that? Sales return on allowances. 100 and 300 on the debit. We've got the 300 in there already. Somehow I already left it for you guys. So you just need to put the 100 in. I think I left it as a model to go through. Leaving that at 400. So there wasn't a whole lot to the exercises. The problem is going to be a bit longer. Exercises took us about 35 minutes. I'm going to stop with that and then go into the problem in just a few minutes.